But let's talk about the flow situation now. In the last 5 days, FIIs have sold almost 5,000 crores in the cash markets in India, and in emerging markets across the globe as well. There's been quite a bit of redemption. Cameron Brandt, the Director of Research at EPFR Global Funds, who tracks all of these flows very closely, joins us on the phone line from Boston. Cameron, thanks so much for joining us this morning. We have seen an outflow of almost $8 billion in the developing markets ETFs year to date. Can you just throw some more color on where the maximum redemption is coming from?
Actually, very clearly from U.S. funds. Outflows this past week were the biggest in over 5 years. And it certainly seems that investors, having decided that the Fed is going to taper, have started making their adjustments at home. We saw over $12 billion flow out of all U.S. equity funds this past week, and another $5 billion come out of U.S. bond funds.
Well, that's a scary thought, you know, Cameron. I mean, when money becomes scarce once the Fed starts tapering, one worries how much more pressure will emerging markets then face. What is your view on that?
I would lean more towards things settling down. A fair amount of the reallocation and the positioning for a move to taper off QE3 has already happened. And as I said in response to your first question, we were certainly seeing signs in flow terms of sort of a bottoming out of redemptions, both among emerging markets equity funds and emerging markets bond funds. Both are actually still in credit year to date, barely. So there's certainly a bit more money that could be pulled out to sort of bring things back to neutral. But I think what will really drive things in the coming weeks is a shift back to more of a country-by-country focus that we're seeing on the part of investors. Certainly in the end of the first quarter of this year, what we saw was really sort of a fairly broad appetite for emerging markets, fund groups and assets, and not sort of a huge response to most sort of individual events in different countries. But lately we have seen flows much more reactive to economic data, to geopolitical events. And I think that may be the trend driving emerging markets fund flows.
Cameron, hi. Just wanted to take Sonia's point forward that we've seen a cash pullout from FIIs of around 5,000 crores in 5 trading sessions itself. It's a strong redemption that we've seen. Hence, what is the call that FIIs have on Indian equities now?
Certainly, India has been getting a lot of less than ideal press over here at the moment. A lot is being written about public finances and the weakness of the rupee. But I think there's still a certain amount of faith in India, certainly in terms of fund flows and fund manager allocations. Outflows from India have been more of a slow grind, whereas in the case of Brazil and China, funds dedicated to them have seen really sharp, heavy outflows since really the middle of the second quarter. So I think the way I would put it is that the expectations for India are not terribly high. So as long as things don't get too bad, I don't think there's going to be a huge flight out of the existing positions in India on the part of certainly foreign portfolio investors.
Okay, just to get more specific then, Cameron, what is the main reason for redemption in India? Is this more of a global emerging market phenomena, or is there an India-related concern, say something like the rupee, which is dominating outflows now?
There's no sort of simple answer there. It's a combination of factors. There's obviously a general reassessment of emerging markets going on in light of the probability that the Federal Reserve will start winding down QE3. There's a sort of longer-term souring of the BRICS theme, the dedicated BRIC equity funds that we track of, I think, only managed to take in money one of the past 52 weeks. So there's the loss of that source of portfolio support. And then, yes, there certainly are some India-specific issues. Historically, when emerging markets come under pressure, we've certainly noticed that the markets that are characterized by big current account deficits frequently come under more pressure than emerging markets in general. And that's obviously an area that India does not score particularly well at. So it's really a combination at the moment of broad factors and some India-specific ones.
All right. What about FII debt flows then? How are they panning out in India? I mean, June and July saw high FII debt redemption, but has that cooled off at all?
Bit better, the ones you've mentioned, with the possible exception of Turkey, and Turkey is always a bit of a wild card because it's in such a volatile region. Sentiment towards Brazil is particularly sour at the moment. In the most recent weeks, dedicated Brazil equity funds had their largest weekly outflow, I think, in about 35 weeks. And they have seen pretty relentless outflows now, starting even before the general retreat from emerging markets. Russia, similarly, is a similar story in that even when emerging markets as a whole were attracting money, investors were beginning to pull back from Russia. It's pretty hard in both of those countries to see where better and more sustained growth might come from, whereas there are still hopes that India has a reform story in waiting, and that perhaps the less benign climate that the country is facing that might spur the government to actually implement some of the ones that we've been talking about.
We certainly hope that comes true, Cameron. We are, in between a hard place and a very, very hard rock. Thanks so much for joining us and giving us your views. So not looking good. I mean, maybe some amount of the debt fund redemption may have bottomed out, but there's maximum redemption that they've seen this week across developing markets, including markets like